Hey guys, it is Julie here with TipRanks, and today we're taking a look at two stocks that analysts at JPMorgan think are poised to benefit from the AI revolution. So let's get into it. Alright guys, welcome back and thank you all so much for being here. Today we're taking a look at two stocks that are poised to benefit from the rise of AI. Of course, AI has been taking off since last fall when ChatGPT took the industry by storm. Many companies have been working hard at how they can put this technology to their best use, and one analyst from JPMorgan recently weighed in on this. Analyst Alexei Gogolev recently said that since ChatGPT came to the public domain, many companies rushed to highlight their AI expertise, lauding themselves as AI winners. We consulted a number of companies in our coverage, technology leaders, and went through various public information in order to analyze who the true beneficiaries and leaders in this ecosystem. So today we're going to take a look at two companies that they believe will realize gains from this AI momentum. Don't forget you can also receive unique TipRanks insights every single week right to your inbox by checking out the TipRanks newsletter center over on our website. There you'll find both the Smart Investor and Dividend Investor newsletter, so you can check out the links in the description down below for that. Now let's get right into these two AI beneficiary stocks. First on our list today is Alkami Technology. Their stock trades under the ticker ALKT, currently priced at $15.75 per share. Over the past year, they have had some ups and downs and are up just over 4% and up 11% in the last 3 months, but have been cooling down a bit here recently. Alkami is a provider of cloud-based digital banking solutions for the U.S. financial market. They have been in business since 2009, and their products allow banks and other institutions to drive their ROI through an improved digital banking experience for customers. The cloud-based platform provides enterprise customers with tools to enhance the user experience, manage large-scale data, and leverage continuous software update delivery. Their data and management solutions include customer insights, data cleansing, and AI-driven predictive marketing. Their ability to manage data at scale is a prerequisite for making effective use of AI. Machine learning systems utilize a brute force approach, basing AI on the analysis of vast amounts of data. Earlier this month, Alkami released their first product to combine their data resources and AI capabilities. The Engagement AI model, a first of its kind in the industry, employs AI and machine learning together with Alkami's proprietary key lifestyle indicators. This helps identify customer behaviors most likely to lead to account retention, a crucial capability for banks seeking to increase account holder engagement with products and services. Alkami did just share their latest earnings report at the start of the month on August 2nd, where they did come out ahead of analyst expectations. For their second quarter, they reported a loss per share of 3 cents, which was 2 cents better than analysts anticipated. Revenue came in at $66 million, which was an increase of 30% year over year, and the company also noted 40 new customers in the quarter. Following that earnings report, we've seen a handful of Wall Street analysts weighing in. Of course, one of those is JPMorgan's Alexei Gogolev. He noted Alkami's transparency and optimization of AI use put it in a good position among the analyzed coverage group. We believe that Alkami has been successfully using AI internally and externally to create efficient and exciting solutions for its customers. The company incorporates AI to personalize user experience and provide automated data analytics, and publishes white papers, case studies, data insights, and digital banking blogs to educate customers. They are ranked among the leading players in our financial services coverage given the versatility of their solutions. Alexei is one of 7 Wall Street analysts that currently have a rating on the stock, and overall it comes in as a strong buy. Based on 6 buy ratings and just 1 hold, the average price target of $21 would be an upside potential of 33%. Down below, we can see the recent ratings here. Alexei's price target of $19 would be an upside of 20%, and he's middle of the road here. On the low end, we do have a hold, still with an upside of 20%, and a couple high-end price targets with upsides of 45%. The second company liked by JPMorgan in the AI world is Procore Technologies. Their stock trades under the ticker PCOR and is currently priced at $63.30 per share. Over the past year, they are up just 3%, but in the last 3 months have grown 7%. Procore provides technology and software systems to the construction industry. They offer a comprehensive suite of collaboration tools through their cloud-based construction management software platform, enabling seamless integration and coordination among builders, contractors, project managers, and property owners. The platform empowers them to use connected devices such as smartphones and tablets for sharing documents, site and project plans, as well as critical data. Using AI, Procore has developed Construction Intelligence, an AI-guided workflow based on accurate data analysis, enhancing insights and decision-making accuracy. Each construction project's data is centralized with Procore's platform, allowing customers to leverage AI-powered analytical tools for a comprehensive understanding of historical data and the formulation of effective KPIs for optimal efficiency. Procore boasts that its customers save on average 15 days on each project and realize a 16% reduction in rework. Procore also shared their latest earnings report on August 2nd, coming out with an earnings beat and their second quarter of turning a net profit. For their Q2, they reported earnings per share of 2 cents, which was well ahead the anticipated loss of 9 cents per share. On the revenue side, it came in at $229 million, which was an increase of 33% year over year. Once again, we have JPMorgan's Alexei Gogolev weighing in on the stock. Alexei says that construction needs to be digitized and early AI adopters stand to benefit and establish themselves as industry leaders. Procore stands out in the space. In an industry where pen and paper are the norm, they have used construction and workflow data to provide insights and better the process. Procore does not appear to be monetizing AI separately from its product offerings and instead is working on increased AI integration and product offerings. Early adoption and innovation with AI provides plenty of growth potential, along with collecting more data to become an industry leader. The Procore stock currently has 13 analyst ratings, coming in as a strong buy with 12 buys and just 1 hold. The average price target comes in just above $82 per share, which would be an upside potential of 30% for this next year. Down below, we can see Alexei's rating with an $85 price target, which would be an upside of 34%, and there's many right in line there with him, a lot around that 34% mark. On the low end, we do have a hold rating, still with an upside of 18%. So there we have 2 strong buy stocks that JPMorgan believes will benefit from this AI revolution. Let me know your thoughts on these companies in the comments down below and whether you agree with their outlook or not. Plus, what are some of your other favorite stocks in the AI space? I know there are a ton of exciting companies out there right now. Always keep in mind that these videos are not a suggestion to buy or sell any specific stock, just keeping you up to date with what analysts are looking at and providing some information and entertainment. So please make sure you always do your own research and due diligence and stick to your own investment plan. Thank you guys so much for watching. I hope you have a great day, and I'll see you back here next time.